All right, what is up, tycoons? What's up, traders? Coming at you guys with an update on Zilliqa. Okay, ticker symbol ZIL. What we're gonna do is we're gonna go over through the current chart setup that we have right here. All right, I'm gonna break this down for you guys super simply. You're gonna learn a lot in this video. Remember, this video is for informational purposes. Of course, this video is not financial advice. Okay, it's simply for informational and educational purposes. It's not to be relied upon as legal, financial, or investment advice. I'm not a registered financial advisor or broker. And trading in stocks, bonds, commodities, crypto, whatever it is, involves a high risk of loss. So read through the full disclaimer. Okay. I'm going to go ahead and get into the video now. But this is what we had on the previous video setup, right? And in the last one, it was pretty simple, all right? And I went over just a couple things, all right? So the main thing that I want to highlight, I went over is we typically see markets move in 3-wave structures and sometimes even 5-wave structures, right? And so we're looking to see if we were going to get this 1, 2, 3 structure right here, okay? We went over our major support levels right here, which are the 38.2, 50%, and 61.8% levels. And the reason we use these is these three are the most common and well-respected Fibonacci retracement levels. You use these to identify trend continuation because nothing moves in a straight line down or in a straight line up. Rather, you would get a move up, retracement, continuation higher. That's that 3-wave setup, that 3-wave structure, or a move down, retracement, continuation lower. Now you can spot reversals. Okay, for instance, if we move up here, retrace, consolidate, and then break below our major retracement levels, then we could have potentially spotted a downside reversal to retest some of our previous lows. Rather, we got 2 reversal candlesticks in a row, 2 dojis right here, and you can see we had a strong breakout back above. Now, I also went over the MACD and how you can use this to spot potential entry and exit signals, which is going to be shown by this red line here. Okay, when this red line crosses above the blue line, that's typically known as an entry signal. And you can see to start off the year, we got an entry signal and a very massive push to the upside with a healthy retracement. And now we're looking to see if we're going to get trend continuation or if this is all part of that healthy consolidation to ultimately, end up trying to get a reversal, right? Now, another thing that I mentioned, that we could be seeing a really big move to the downside here was we had something known as bearish divergence, right? So if you see here, we had this high, okay, and then we had this higher high. So the token was clearly in an uptrend, right? We're making higher highs here. But if you look at the RSI, we had a high and then we had a lower high. So the RSI was actually in a downtrend. So we're losing relative strength as the price of the token is going higher. This is something known as bearish divergence. And then you take a look here and we ended up getting a MACD sell signal as well right at this time shortly afterwards. So, if you're ever looking to protect your trade or protect your profits, when you start seeing some of these signals flashing, this is a good time to, manage your risk accordingly and get in some type of protection on the play, right? So what we're going to do is I've actually further, set up the chart for you guys a little bit. This is our current chart setup. And I want to explain a few more things, right? So we went over the bearish divergence and the MACD, okay? I do want to highlight that we are testing this RSI divergence trend line right here. And if we can get a breakout, what we want to see is a breakout and retest of the trend line and ultimately bounce higher. Now, if we get a false breakout, aka a look above and fail, this is going to be significant, right? And the reason it's going to be significant is because bulls are presented the opportunity here on a breakout to really push price higher and keep that bullish momentum. So if they look above and fail and come back down in below the trend line, that's going to be indicative that the bulls did not take advantage of the opportunity, right? That they're not actually in control because they were fully presented the opportunity to push things higher. Rather, that bears are in control, and then that could have been a liquidity grab, right? Now, what's a liquidity grab? This is a really good example of a liquidity grab right here, right? You notice how it says bearish below, and that's ultimately because if we flip this area to resistance, then we're going to be bearish below and possibly look at that retracement reversal, right? Rather than retracement continuation to the upside. So a lot of times, market makers, algorithms, right, they'll trigger people's stop losses, right? So, people will have stop losses around this area. Okay. And they know that, right, because they're using some of these are mathematical formulas that I'm showing you guys, right? The fibs is a mathematical formula. So, these algos and these, market makers and these whales, they essentially have you know, they know where certain people's losses are, right? Stop losses, and they stop hunt and they do liquidity grabs, right? Because really they want to push price higher up here, but it may not be as liquid as they want, right? So what they do is they gather the liquidity through a liquidity grab, trigger people's stop losses, and whenever your stop loss gets sold, right? Whenever your order gets sold, obviously there's another party on the other end that it's selling to that's buying that order, right? So this is a really good example of a liquidity grab, something good to learn about. All right, now right after that liquidity grab, you can see that we ended up getting a MACD entry signal with the red line crossing up above the blue line. All right, so we had our reversal candlesticks here, and then we blew through right here, right? And if we would have flipped that 0.02364 to resistance from support, then we would have been bearish below here and started going back down. Now, something else I want to highlight, all right, is you have to understand algorithmic buying when you see it, right? And you can spot these buying channels. And that's what these green channels are right here, right? Is, this is algorithmic buying, systemically pushing price up higher. All right. And you don't really want to short something while it's in these trading channels, right? Rather, once you get the break of the channels, that's when you really start to see, the selling pressure start to come in, right? But for now, or at this point in time, we had that buying channel, that systematic algorithmic buying, and we're starting to put in another buying channel here currently, right? So, you can see we're testing the lows 3 times, 2 more times over here. We have this systematic buying that's coming in and pushing price higher up towards the top of this trading channel, right? And so if we move and go through this area, it's going to take us to our overhead supply zone, which I'll break down here in a second. And potentially even up to our bullish price targets that we have up here, ultimately for that 1, 2, 3 larger scale move up to about 0.04 040 up to about 0.045, right? So those are our bullish overhead price targets. Now, in order for us to really hit those levels, okay, ultimately we need to break out past 0.03105. Now, at the time of this recording, okay, we're testing it, right? You can see we wicked out above there, but we haven't actually been able to close, right? The close of the candle is what's actually significant, all right? And we haven't been able to close out above there, but if we can, flip 0.03105 from resistance to support, as these are our major retracement levels of resistance, right? These were the support levels, from the move up to the move down. These were our major support levels, okay? But since this move down, we've had a healthy retracement, okay, up to our major resistance level. So if we stay below this level, we have the possibility of coming back down and getting a 3-wave structure to the downside, right? But ultimately, we're looking for the larger 3-wave move to the upside. So if we can break out above this level and stay within our buying channel, right? So for instance, we get a breakout retest, or maybe even we come back down and consolidate a little bit below it, but ultimately stay within this algorithmic buying channel and break out through it, and we're able to be bullish essentially above that level. Now, the reason that this supply zone is important is because this is an area where there are sell orders, right? And where there's an imbalance of sell orders that potentially could push price lower. Now, as I just explained, the supply zone is simply just an imbalance of sell orders. So over here, there was an imbalance and that ended up pushing price lower. Now, the more times you test these zones, just like support and resistance, the weaker they get because more orders are getting filled, right? So if we come back up to this range in our buying channel here, and there's still sell orders, we could see the price push back down. But to really create and maintain that sell order imbalance, most likely, sellers are going to have to refill their orders, right? Because the orders got filled over here. And if we come up into this zone again and they get filled, the orders are filled. So now if you come up and then retest it and continue to retest it, you're going to be filling those orders. And unless those orders are getting replaced and replenished, then you have a stronger chance of breaking through above it. So the supply zone here is really our breakout level from about 0.035 up to about 0.037. Is going to be some, major sell orders right here that we really need to break out of the supply zone in order to push back up higher into our overhead bullish price targets. All right. So Hopefully you understood this video. Hopefully you learned something new. All right. If you did, smash that like button, subscribe to the channel if you guys are new, so that way you don't miss any more of my videos, as well as any of my updates on your favorite tokens and cryptocurrencies. I also cover stocks, commodities, and bonds. You can use some of these same trading strategies to really, trade multiple markets, whether it's cryptocurrency, whether it's Forex, whether it's stocks, bonds. Once you start to learn a few of these things, then the candlesticks and liquidity and things like that, they start to click a little bit more, and you can start, applying these to your favorite choices.